Are you paying for life insurance you might not even need anymore? As you get older, your financial needs change, and what once seemed like a must-have might now be an unnecessary expense. With 2025 around the corner, it's time to rethink your life insurance policy. Should you keep it, adjust it, or cancel it altogether? In this video, we'll break down the types of life insurance, explore how your needs shift as you age, and help you figure out whether it's still worth the cost. We'll also dive into key decision points for 2025 and give you the steps to reassess your policy. Stay tuned. You might be surprised by how much you can save or adjust to better fit your financial future. Understanding life insurance for older adults. Key concepts. Life insurance comes in a few different forms, each serving a unique purpose. Term life insurance is the simplest and most affordable option. It provides coverage for a set number of years, usually 10, 20, or 30. If the policyholder passes away during that time, their beneficiaries receive a payout. This type of insurance is typically chosen by younger adults who need to cover big financial responsibilities, like a mortgage, raising children, or income replacement. Whole life insurance, on the other hand, offers lifelong coverage. It comes with higher premiums but builds cash value over time, which the policyholder can borrow against or withdraw. Many people choose this when they want something more permanent, with the added bonus of an investment-like component. However, as people age, their need for income replacement may decline, especially if children are grown and major debts like mortgages are paid off. Universal life insurance is another permanent option, but with more flexibility. Policyholders can adjust the death benefit and premiums as their needs change. This might seem appealing for older adults who want some control over their policy as they move into retirement. However, its higher cost can be a burden when income becomes fixed and the need for large death benefits decreases. As people get older, life insurance shifts from being about income replacement to covering final expenses, leaving a small inheritance, or helping with estate planning. Older adults may no longer need a large policy to replace lost income or pay off significant debts. This is why it's crucial to reassess your financial situation to ensure your life insurance matches your current and future needs. Evaluating your current financial situation, the first step. As you get older, it's important to take a close look at your financial situation to see if your life insurance is still doing its job. Start by considering your retirement income. If you're already retired or close to it, ask yourself if your pension, Social Security, or savings are enough to cover your expenses without needing life insurance as a safety net. If you no longer have dependents relying on your income, like children or a spouse, your need for life insurance might not be as strong as it once was. Next, think about any debts you still have. Are you carrying a mortgage, or do you have significant loans or credit card debt? If these debts are mostly paid off, life insurance for debt coverage may no longer be a priority. However, if you do have lingering debts, a smaller policy may still be useful to ensure your loved ones aren't left with financial burdens. Also, consider your family's needs. Do you still have a spouse or other dependents who would struggle financially without your support? If they rely on your income, even in retirement, keeping a policy might still make sense. On the other hand, if they are financially independent, the need for coverage decreases. Practical tip: create a list of your current expenses, income sources, and any outstanding debts. Compare this with your life insurance benefits. If the numbers no longer add up, it might be time to rethink your coverage. When should you keep your life insurance policy? There are several scenarios where it makes sense for older adults to keep their life insurance policy. One common reason is providing for a dependent spouse. If your partner relies on your retirement income to maintain their lifestyle, keeping a policy in place can ensure they have financial support after you're gone. This can offer peace of mind, especially if your spouse might struggle with reduced income from pensions or Social Security. Another key reason to hold on to your policy is to cover final expenses. Funerals, medical bills, and other end-of-life costs can add up quickly. A modest life insurance policy can ease this burden for your loved ones, allowing them to focus on grieving rather than worrying about bills. Some people also choose to keep their policy as a way to leave a financial legacy for children, grandchildren, or even a charitable organization. If you're in a position where your life insurance policy isn't needed for immediate expenses, this can be a thoughtful way to pass on a financial gift after you're gone. However, if your current policy feels too large or costly for your needs, there are options for adjusting it. Maybe you don't need as much coverage as before, or want to explore different types of policies with lower premiums. When to adjust your life insurance policy. Flexible options. Sometimes keeping your current life insurance policy as it is may not be the best option. Instead, adjusting your coverage might provide more value and better align with your needs. One option is to reduce your coverage. If your policy was originally taken out to cover a mortgage or raise children, you might no longer need such a large payout. Reducing the death benefit can help lower your premiums while still providing enough to cover final expenses or help a spouse financially. Another possibility is converting a term life policy to whole life. Term life policies end after a certain period, but many allow conversion to whole life without a medical exam. This can be useful if you want lifelong coverage and the ability to build cash value over time. However, keep in mind that whole life insurance comes with higher premiums, so you'll want to weigh whether the added benefits are worth the extra cost. Updating your beneficiaries is another simple but important adjustment. If your life situation has changed, whether through divorce, remarriage, or a shift in family dynamics, you may need to ensure the right people are listed as your beneficiaries. A quick review of this can save your loved ones confusion and legal headaches down the road. While adjusting your policy can help keep it relevant, there may come a point where life insurance is no longer necessary. When to drop your life insurance policy. Knowing when it's time. For some older adults, dropping their life insurance policy makes perfect sense. One key factor is the financial independence of your dependents. If your children are grown, financially secure, and no longer rely on your income, the original purpose of your policy may no longer apply. You've already provided for them, and they may not need the extra support when you're gone. Another reason to consider canceling your policy is if you're in a stable financial position. If you've built up enough retirement savings, investments, or other assets to cover your expenses and provide for your spouse, life insurance may no longer be necessary. You may feel confident that your loved ones will be financially secure without the added death benefit. Eliminating debt is another major factor. If your mortgage is paid off, you've cleared your loans, and there are no significant financial obligations left behind, life insurance coverage might seem less relevant. With no debts for your family to handle, there's less need for a payout after your passing. However, some people hesitate to cancel their policies due to common misconceptions. They may feel like they're giving up something valuable or worry that canceling will leave them unprepared for unexpected costs. Let's clear up some of the misunderstandings surrounding canceling life insurance, so you can make an informed decision about what's best for your situation. Common misconceptions about canceling life insurance. Many older adults hold on to life insurance out of fear, often because of common misconceptions. One belief is that life insurance is always necessary, no matter your age or financial situation. The reality is that life insurance is most useful when you have dependents or significant financial obligations. If your loved ones are financially independent and you're debt-free, keeping an expensive policy might not make sense. Another myth is that canceling your policy will automatically leave your family at risk. However, if you've saved enough for retirement, have a steady income from pensions or investments, and your debts are paid off, your family is likely in a stable position without needing a large life insurance payout. In fact, dropping your policy could free up money that you can use in your retirement or invest elsewhere. Some also worry that canceling their policy is too complicated or will come with penalties. While it's important to check with your insurer, many policies allow you to cancel easily if you no longer need coverage. Now that we've debunked these misconceptions, it's time to explore the key decision points for 2025 and how shifts in the financial landscape could impact your life insurance choices moving forward. Key decision points for 2025. In 2025, deciding whether to keep, adjust, or drop your life insurance comes down to a few key factors. The first thing to consider is your current health. If you've experienced changes in your health, like new medical conditions, these could influence your decision. A serious health issue might make keeping your life insurance more valuable, as it ensures that your family will have financial support for any final expenses or medical debts you leave behind. Family circumstances are another big factor. If you've recently welcomed grandchildren or have a spouse who's still dependent on your income, keeping or adjusting your policy might be worth considering. On the other hand, if your children are fully independent and your spouse has a secure income, you might feel more comfortable scaling back or canceling your policy. Shifts in your financial needs are just as important. Rising healthcare costs are a reality for many older adults, and this could mean you'll need extra funds to cover those expenses. If you're worried about covering long-term care or medical bills, keeping a life insurance policy might provide peace of mind, ensuring those costs don't burden your family. Alternatively, if your retirement savings and investments are solid, you may no longer need life insurance for financial security. Ultimately, the decision to keep, adjust, or drop your life insurance hinges on how well it fits your current needs. As you navigate these changes in 2025, it's essential to reassess your policy to make sure it's still serving its purpose. How to reassess your life insurance policy in 2025. Reassessing your life insurance policy in 2025 can be straightforward if you follow a few key steps. Start by reviewing your policy's terms. Check the coverage amount, the length of the policy, and any cash value it may have built up. This will help you understand exactly what you're paying for and whether it still meets your needs. Next, look for any fees or penalties that might come with adjusting or canceling your policy. Some policies have surrender fees if you cancel within a certain time frame, so it's important to know if there will be any costs involved. Also, check if your policy allows you to reduce coverage or convert it to a more suitable option without penalties. It's always a good idea to speak with a financial advisor or insurance agent during this process. They can offer personalized advice based on your financial situation, helping you figure out whether to keep, adjust, or drop your policy. They can also guide you through alternatives if life insurance no longer fits your needs. If you decide life insurance isn't necessary anymore, you can explore options like long-term care insurance, health savings accounts, or investing more in your retirement fund. These alternatives can help cover healthcare costs or other financial goals in your later years. Alternative options to life insurance for seniors. If you decide life insurance isn't necessary anymore, there are several practical alternatives to consider. One option is self-funding your final expenses. This involves setting aside savings specifically for things like funeral costs or medical bills. You can use a regular savings account or create a designated fund to ensure these expenses are covered without needing a life insurance payout. Relying on retirement accounts is another solid option. If you've built up enough in your pension, 401k, or other retirement savings, these funds can provide financial security for your family when you're gone. Just make sure you've set up your beneficiaries correctly so the money is easily accessible. Another alternative is long-term care insurance. This type of insurance can help cover the cost of nursing homes, assisted living, or in-home care if you need it later in life. It's a good way to plan for rising healthcare costs without relying on life insurance for coverage. Steps to take if you decide to drop or adjust your policy. If you decide to drop or adjust your life insurance policy, the first step is to contact your insurance provider. Ask them about the process for canceling or adjusting your policy and any potential fees or penalties involved. Some policies might have surrender charges or tax implications, so it's important to fully understand the financial impact before making any changes. If you're adjusting your policy, inquire about options like reducing the coverage amount or converting a term policy to a whole life policy. This can help lower your premiums while still keeping some level of coverage. For those with a whole life or universal life policy, there's often a cash value component. You'll want to ask your provider how much cash value you've accumulated and what your options are for accessing it. You may be able to withdraw some of the money, take a loan against it, or use it to pay your premiums. Just be sure to understand the tax implications of tapping into the cash value. Once you've made your decision, it's time to focus on securing your financial future in 2025. Final thoughts. Securing your financial future in 2025. Life insurance can be an important part of securing your financial future, but it's just one piece of the puzzle. As you age, staying proactive and regularly reassessing your financial plan ensures that your coverage still meets your needs. Whether you keep, adjust, or drop your policy, the key is making informed decisions that align with your current life stage. Thank you for watching. If you're unsure about your next steps, consider consulting with a financial advisor to explore your options. Stay tuned for more videos, and remember to keep your financial future a top priority.